What is going on, investors? Hopefully you guys had a great day out there. Time to talk about PayPal Holdings Company, ticker symbol PYPL. Now, the stock is trading off by about 5% in the after hours after coming out with Q2 results. But it's really, I think people are focusing on this Q3 results where they're predicting revenues between 6.15 billion and 6.25 billion. You might ask yourself, well, what are the numbers they just posted? They've just posted 6.24 billion. And so they're actually guiding for a quarter that is flat, if not down. Now, typically management sandbags these types of things. Consensus was at 6.45. It could be that next quarter PayPal comes closer to that 6.45 and all of a sudden it looks like a beat when you come out with your press release. I don't really know what's going on. I think some of it makes a little bit of sense. And when we get into the numbers, we'll talk about that. The other thing that we'll talk about on today's show, look, we got a 5% drawdown in the stock. This stock has come back down from periods of highs that it just made. So we'll talk about from a technical perspective, what could we see with PayPal? Could we be creating some buying opportunities? Look, I know we all love our stocks just going up and up and up, and this one's gone from like $99 up to over $300 per share. So when they come back down, it might hurt a little bit our ego, but it does create buying opportunities. So we'll talk about if this stock is starting to reverse trend, pull back into an area where we could potentially buy these shares. We'll talk about that as well. Let's kick things off with the numbers. Now, they do lead things off with a balance sheet over at PayPal, but how useful is this when on the asset side, $35 billion is customer funds. On the liability side, you balance that out with $38 billion essentially of liabilities. I'll let you decide. All things being considered, there's not much there on the balance sheet. I won't waste your time with that. Now, moving over to the statement of income, which is revenue and profit, we've got our 3 months ended here. On the left-hand column is our most recent quarter. We talked about how they just printed $6.24 billion. And again, they're guiding between 6.15 and 6.25. That is for the upcoming quarter. We'll talk about maybe potentially why they're doing that here in a second. Now, look, last quarter, on a quarterly basis last year, we were sitting about $5.3 billion. So we added a little over $1 billion actually to our net revenue side. We see for the 6 months as well, went from 9.9 up to 12.3 or so. So all things being considered, looking pretty good there from the revenue side of the business. Now, unfortunately, this is kind of viewed as a tech stock, but it's really a payment stock. And payments is not necessarily a super high margin business. That's why I think when you see this soft outlook, this soft guidance and stuff, the stock does react actually pretty well because investors realize, well, look, if revenue is not going to really growing quarter over quarter, we can actually expect almost the same quarter we just had, right? Okay, you're probably going to have similar transaction expenses. Those came in at $2.5 billion. You're probably going to have similar transaction and credit losses. What I am noticing though, year over year, these transaction and credit losses have fallen off a cliff. So it just means consumers are paying their bills, and whether they're doing that with the government's money or handouts or stimulus, however you want to refer to that, I don't really care. But, I don't know. Or if they just have a job and they're just financially healthy, I don't know. Maybe it's a mix of both. We'll see what happens in subsequent quarters if and when we see the expiration of a lot of these programs that came out during the pandemic, like unemployment assistance and those types of things. We'll see if this number ticks back up. Look, that is not necessarily something that is related to PayPal. If this number ticks up, it obviously will hurt their income and their profit and those types of things. I'm speaking more from like a macro sense, because if all of a sudden people's not paying their PayPal bill, well, they're probably not paying their other credit card bills, and it might impact stuff like mortgages, cars, those types of things. We start seeing impacts there, then we start seeing the economy start to slide, and that could create even more buying opportunities as the stock market could potentially fall very, very quickly if people stop paying their bills. But look, we're not seeing any evidence of that. In fact, we're seeing absolutely fantastic conditions for that. So it does support a strong economy, at least at the current time. You got customer support and operations. You actually like to see this number tick up. If you know anything about PayPal, customer support, especially with like Venmo and those types of things, can be very, very lacking, and it can be very, very frustrating for consumers. Okay. And so I actually like to see them spend a little bit more. They spent about $100 million more on customer support and operations. We got sales and marketing that did tick up as well, as you'd expect with this number ticking up as well. You love to see this general administrative up just slightly, okay, just fractionally, almost from a rounding perspective. It's the same number, and you like to see that they're not wasting money there. They're funneling money into customer support, sales and marketing, those types of things, instead of just back office staff and those types of things. So moving on down to net income after we pay our income taxes, other things. I mean, we could stop here at operating income, and normally I do. Okay, with most companies, I stop here at operating income because look, interest rates change, income taxes change. So net income can be affected one way or another from that. And also you sometimes have other income and expenses as well. But when the two numbers are almost identical, okay, and in this case, we went from $1.1 billion in operating income and essentially $1.2 billion in net income. I tend to focus on net income. I'll factor in taxes and those types of things. We see in the previous period, we went from 951 on the operating side up to $1.5 billion. That's because we had $848 million of other income. So maybe PayPal sold off a business unit, those types of things. Maybe they had a big gain on something, Bitcoin, I don't know. And so they're able to recognize a massive gain there. So all things being considered, though, pretty consistent looking balance sheet. And here's what investors are going to expect. Look, maybe PayPal does come in on the upside of their guidance for the next quarter in Q3. Well, the financials are going to look almost the same. Okay, they're probably going to print about $1 billion to the operating and net income side. You're going to earn about $1 per share. Now, this stock does not pay a dividend. So if you like the payment space, personally, I'd focus more on Visa and those types of stocks because they do pay a dividend. And it's basically the same. I mean, it's literally the same business. Okay, now moving down to cash flows, same thing that we see here. Okay, you pull down this net income number and the cash flows for operations are about the same. So I tend to focus really just on net income. Everything else in here is about what you'd see. There's not really a buyback. There's not a lot of investing. There's some money flip-flopping, but there's not really a lot going on with cash flows. So I'm not going to waste your time because there is some other stuff in here that I do want to point out. So here's transaction revenues, and we see our current quarter over the previous quarter. These things have stalled out, okay? So they're showing quarter over quarter, it came in at 3% in terms of transaction revenues. We see back in December, you'd expect transaction revenues to grow, right? People are buying stuff online for gifts and those types of things. Well, it would grow. But look back here in June. Okay, look at June, 17%. That's why if you're in the e-commerce business like I am, I sell on Amazon, sell on other websites, sell on my own website, those types of things. Back in June was like Christmas. And I remember getting on certain videos, depending on if it made sense or not, and saying that right now what we're seeing in terms of online sales is like Christmas. And so PayPal was able to pull forward a ton of transaction and probably acquire a bunch of users back in June because look, the growth in June was even exceeded what you saw in December, but we come down to a more normalized rate and they're projecting that in subsequent quarters as well. Now, in terms of US net revenues, we're seeing a lot of growth here in the United States as well. They've got some international stuff as well. The last thing I want to focus, though, is on active accounts. You saw back in June, look, 7% were active back there because people were buying groceries online. People were buying stuff online, maybe for the first time or for first time for some types of goods. And so you saw big time growth in active accounts. That has slipped to a more normalized level. The other thing is number of payment transactions. Again, still nice growth, okay? And in fact, we were negative in the previous period where we reported this. But again, nothing like we saw this time last year. Okay, this company really benefited from a shutdown. So if you think we're going to get shut down again, maybe PayPal is a buy the dip opportunity. The other thing that you want to factor in with PayPal is, look, this is its slow season. Okay, historically before Christmas, as we head into back to school time, a number of e-commerce businesses, okay, even mine included, it kind of wanes a little bit as we get back to school. People are buying backpacks, shoes, clothes, things like that for their kids. They might not have that extra money to spend on something else. Not only that, they're going to Disneyland, they're going on vacations, those types of things. We didn't see any of that last year, okay? We didn't have a lot of back to school shopping in terms of clothing and attire, and obviously we didn't see really much of any leisure travel as well, at least out here in some of the larger markets like California, New York, and even Florida and those types of places. And so PayPal should rebound in Q4, right? We still should see awesome recovery in Q4. Also, if you're of the belief, and again, I'm not necessarily saying this myself because I'm not a doctor, but it could be that we're going back. I don't want to say the word shutdown like it's a bad word or something, but we could see an elevation of that. Okay, we're already seeing mask mandates. Those tend to be the first step of things being quote unquote shut down. So obviously if that happens, a company like PayPal stock will likely reverse course very quickly. Now what I see is we're basically in a trading range with this one. Okay, it had a massive move, and I don't necessarily have to come back here and show you, but we were on a massive move with PayPal, and really it started in December. Really, we could almost say the beginning of this year. We've been trading between 240 is the bottom of the range, $240 per share, and the top end of the range is about 310. Okay, we went from 240 to 310, back to 240, all the way back up to 310, and now we're coming back. And in my opinion, there's two logical stopping points for PayPal stock. The very first one is at 275, and I say 275 plus or minus, I'd say $5. Okay, you could probably come up here to 280 because this could be the stock. Everybody's looking at these charts. Everybody has the exact same lines that I do. And some people might see this pullback to PayPal and jump the gun and say, look, we're going to go on lockdown. People are going to have to buy more goods online. People are not going to be as willing to go out as they have over maybe the last 8 weeks or so. And so maybe some people jump the gun on this stock. So 275, 280, even down to 270 if the momentum continues to go lower. That can be an intermediate buying opportunity. Let's just assume, hypothetically, that you want to buy 10 shares of PayPal and you want to get it on a dip. You don't want to come up here and pay at the top of the range at 310. You'd really like to actually do that on a breakout, okay? And I don't need to explain that right now because I don't think necessarily PayPal is going to do that in the shorter term. In the longer term, I think we do see a breakout over 310. But let's just assume you want to buy 10 shares of PayPal. You get a pullback down here between 270, 280. This is a spot where I'd be a little light, okay? 1 share, 2 shares, sprinkle in a couple shares, see what happens with the stock here. Because it could bounce here, go back up to 310, come back, and we could kind of like consolidate between 270 and 310. I certainly could see that. Because here's why I wouldn't be super aggressive at like the 275, 280. I wouldn't unload my whole 10 shares. Because you break this level, and the odds of you going lower just obviously go much higher because you've broken that level, right? But when you break certain levels, well, I could easily see this stock coming down to 260. That would be an area where I'd add a couple more shares, and then you come all the way back down. Let's assume that the pattern's still in place, where we go from 240 to 310, back to 240, up to 310, back to 240. You'd like as much dry powder down here at this 240, and again, plus or minus $5 to $10 down here, because you could break 240, come down to 230. There's an area of support down there, and even lower than that, you got 210, 211. You'd like some ammunition down here, okay, to buy this stock if you need to. Now, on the way up, you're looking for a break above 310. And if you look at charts, I have some of them up here, actually. If you look at a chart of Microsoft, same thing. This stock was in sideways consolidating. It broke above it, consolidated sideways, broke way above it, came all the way back, and then did a monster run. That's why we look for those types of runs. Same thing with Google. It was sideways consolidation, broke above it, and basically the chart goes off the charts now. Apple, similar type thing. Okay, now it hasn't broken up really high, but sideways consolidated, broke up. Once you break above these highs, it's off to the races. That's why we keep an eye on these highs. And this is why some traders trade simply on momentum. They actually buy the rip above the highs, okay? And so on PayPal, a very, very bullish thing was be at some point, doesn't necessarily be anytime soon, but at some point we retest this 310 level and then peak our head up to 311, 312, 313, 314 on this one. And really, you'd like to see printing 2 candles above that, and then you could be resuming an uptrend, and this thing, you know, could add 10, 15, 20, $30 to the stock price in a hurry. So that's the uptrend. I think that's the longer term trend. A pullback on PayPal, in my opinion, is a buy the opportunity, okay? If you want financial services in your portfolio, if you're buying a stock like PayPal, I strongly recommend you look at stocks like Visa, MasterCard, and those types of stocks as well. And you could probably lump like a Bank of America, JP Morgan. I would look at financial services as the entire banking sector. And I think you want, look, I preach on this show all the time, Google, Apple, Microsoft, and those types of stocks. But I do have exposure to the financial system, PayPal, Visa, MasterCard, Bank of America, JP Morgan, those types of stocks as well. So that's what I'm seeing with PayPal. Hopefully you guys enjoyed this video. We'll be back again soon with more videos. Good luck with your investments.